Alibaba's latest earnings are out, and the headlines are screaming miss, revenue miss, earnings miss. The stock is down almost 8%, and a lot of investors might be eating the panic button. But hold on a second. If you are a Baba shareholder or even thinking about investing, dumping the stock based on those surface level numbers could be a massive mistake. Because buried underneath those headline figures is a report that, frankly, has a lot of good news for the long term investor. We are talking significant shareholder returns, accelerating growth in key divisions like cloud, and clear strategy that's planting the seeds for future dominance. So, before you react, you need to see what's really going on. In this video, I'm breaking down Alibaba's latest earnings report, the real story. Stick around, you won't want to miss this. Let's start with the news. Alibaba shares dropped more than 7%. Big profit miss. Right now, the stock is down 8%. And this was a miss in both revenue and earnings when compared to expectations. But what was that expectation? The quarter came with 336.5 billion Chinese yuan, and the expectation was 237.2. So this is a miss on revenue by less than 0.5%. So I would say that's flat. So we in line with expectations. So that's, I would not say that's the reason for the stock to be down 8%. When you talk about net income, it came with 12.4 billion yuan. Expectations were 24.7 billion. So it's a big miss. Net income came around half of what was expected, which is very bad if you look to the numbers about that. But in my opinion, I was expecting a very good quarter from Alibaba. Revenue came in line with expectations, which is good. Net income, half of that is looks bad, but I was expecting a bad number on the net income because CEO management in the previous quarter already warned investor that they will be investing a lot in the next few quarters because they have a lot of capex to do, investing in their cloud, in AI. So I would say that is expected for Alibaba earnings to be down. So it's not a big surprise. Looking into the quarter earnings, words from the CEO. Our results this quarter and for the full fiscal year demonstrate the ongoing effectiveness to our user-first, AI-driven strategy, with core business growth continue to accelerate. Driven by strong demand for AI, Cloud Intelligence Group quarterly revenue growth accelerated to 18%. So this is very good news. Cloud growing at 18%. Bear in mind, last quarter, it was an acceleration. I don't remember exactly. It was to 8 to 12%, around that. Right now, seeing that accelerating coming up, it's very good news. And if you follow our channel and watch our video, you already know that we are betting big that cloud will be growing in the next few quarters very high. Previous quarters, we have seen cloud revenue stagnating, barely growing, and in this channel we're talking that in the future are investing and we'll see a growth in cloud intelligence group, and that's what we are seeing, and that's very good news. With AI related product revenue achieving triple digit growth for the 7th consecutive quarter. Customer management revenue at Taobao and Tmall group grew 12% this month. Very good. Taobao and Tmall, it's the biggest share of their revenue, so it's really good seeing them growing at 12%, reflecting the sustained impact of investment in user experience and effective monetization. Looking ahead, we'll remain focused on our core business and continue to drive AI plus cloud as a new engine for our long-term growth. Very good news from Edu, CEO of Alibaba. Then we see the Chief Financial Officer. We deliver a strong quarter with revenue growth of 7% and EBITDA growth of 36%. So, seeing Alibaba growing 7% revenue year on year, I don't think that's really good. Actually, I was expecting more. We have seen JD growing above 10%, which is good news for JD, but I'm expecting Alibaba to be growing fast. seeing only growth of 7%, that's for me one of the bad news on this report. But profitability, EBITDA growing faster, so growing a lot, it's good news. We are confident in our business outlook and will continue to invest in our core business to strengthen our competitive advantage. That's what we are seeing. I'm an investor in Alibaba because I believe in their business model, so they could achieve high returns on invested capital, at least above 10%. I believe in that. So if they could do that, I want them to be investing their money, and that's what they are doing, especially in segments like cloud and AI, which could have very good margins in the future. So that could be really, really good and take Alibaba to the next level. We remain committed to enhancing shareholder returns. During fiscal year 2025, we repurchased 11.9 billion shares, achieving a 5.1% net reduction on outstanding shares. That's something I really love to see in Alibaba. During the last year, they bought back 5% of their shares, so they are returning capital to the shareholders in that way. So that's very good news. Our board of directors approved the distribution of annual and special dividend, said Tobishu. So that's something we will look into it, and looks like very good news. Seeing a company redistributing their profit to the shareholders, it's always value creation for the shareholders. So looking at the presentation, revenue growing 7% year on year. That's not good news. Net position going down, but it's not, because they are investing a lot and they are distributing that to the shareholders. Taobao and Tmall business growing 12% year over year. Good news. We want to see their core business growing around 10%. Cloud revenue growth accelerated to 18%. We have said very good news. And AI demand triple digit growth. So that's a business I really believe in the next, in medium long term, we could see cloud being the biggest part of Alibaba's revenue. So China is investing a lot in technology. They are trying to be leaders in the world, so it will have a major growth in the next few years. So I'm expecting for Alibaba to be one of the biggest beneficiaries. Strategy is to remain focused on our core business and continue to drive AI cloud as a new engine for long-term growth. If they want to invest in cloud and AI, I'm all on it. So that's really good news. In share repurchase, during the last year, last 12 months, they bought back 5.1%. Right now, they are reducing the buybacks, which makes sense because during the last quarter of this year, Alibaba's valuation, the stock price is up a lot. So it's not as big of a discount, but when the Alibaba stock was cheap, they were buying back a lot of shares. So good news. In terms of dividend, they approved their normal dividend, which is not normal, actually it doubles. $2 per share, US dollars per ADS share, and they added a new special dividend of $0.95 per ADS. So it will be a big one-time dividend. I would say it's very good dividend because they have really strong balance sheet. They are using their cash in hand to do investments on AI cloud and on their core business. They are doing buybacks, especially when the shares were cheap in previous quarters, and now they are paying a dividend. So very good news for Alibaba shareholders. Revenue going up only 7%, while Tmall and Taobao business grew 12% and cloud 18%. What is the reason for overall revenue just to grow 7%? Let's dive deep into it. So let's look at the segments. I think we see that Taobao grew 12%, good news. International digital commerce grew 22%. Actually, in the previous quarter, they were growing faster, I would say so. But still, 22% growth year over year, it's very good news. In terms of cloud intelligence, it's the best news we have seen in this report. Good news, growing 18%. And if they continue to grow above 20%, That could be a major revenue and profits driven for Alibaba in the next few years. So Scania Smart Logistics decreased 12%. So that's the problem. Scania, their logistics smart business, the revenues were down. Why this happened? Let's dive deep into it. Primarily due to the decrease in revenues from domestic logistics service as a result of our e-commerce business taking on certain logistics platform roles. So basically, probably it's some financial engineering, other segments doing the logistics for their business and not taking that to Kanye. I don't know, but that's something I don't like, especially because I'm a shareholder of Alibaba. But probably Sanyao has a lot of revenue in that segment, so it's a big part of Alibaba. So that's why seeing that part of the business slowing revenues around 12%, it took a hit on Alibaba revenue. So that's the bad news. For the rest, I don't think this is a bad report. Alibaba remains the same. All check marks on our fundamentals checklist. They continue to grow, which is very good. Chinese economy, we have seen in this report from Alibaba and NJD, their economy is accelerating, but in this quarter that we are right now, we don't know the impact of tariffs. But if the tariffs with this truth, they can have some agreement. If the Chinese economy continue to recover, we can see major growth on Chinese companies like Alibaba. Return on invest in capital going up, shares outstanding going down because they were doing a lot of FX. And if they continue to grow revenues and start to improve their margins to normal levels, we can see that free cash flow per share resume growth and big exponential growth in Alibaba stock price. So right now they remain under our fair value. If you want to see how we calculate our fair value, you have to look into previous video from Alibaba in this channel where we explain all the details, fundamentals and qualities of the business. So there you have it. While the market might initially fixate on a slightly revenue miss, the bigger picture for Alibaba looks far more promising. We have seen a commitment to shareholder returns through increased buybacks and that special dividend. We have seen impressive accelerating growth in their cloud intelligence group, which is absolutely crucial for their AI ambition. And yes, while their Taobao and Tmall growth might not have shot the lights out, it's still solid, and their heavy investments in AI and cloud leading to higher capex now is exactly what a forward-thinking tech giant should be doing. In the short term, these investments might weigh on earnings, but for long-term Baba bulls like myself, this focus on innovation and future growth is precisely what we want to see. The fundamentals are shifting and there are strong signs of a positive trajectory if you look past the immediate noise. What are your thoughts on Alibaba's earnings? Let me know in the comments below, and if you found this breakdown helpful and want more deep dives into stock valuation and investment opportunities, make sure to hit that like button and subscribe to the channel for more content. Thanks for watching. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.